What yield's going to bring in the buyers?
That's always the question. If only I had the perfect answer to that one. Well, we did see a little bit of a bid at around 3% the last time the 10-year went there, right? And that pushed the yield back a couple of basis points. But the reality is that, look, yields are heading higher, and the markets are starting to reckon with that reality. And the biggest game in town, and I know there's so much noise, right? There is geopolitical noise, there is constant economic data noise, but the reality is that central banks are the biggest game in town, and that is the most important thing that is happening that is affecting the bond market's removal of that liquidity.
But if you look at other bid-to-cover ratios, and if you come inside the Bloomberg, this will show it. The blue bars are the bid-to-cover ratios of 10-year auctions, and the white line is the yield. There's two ways to look at it. One is that rising yields is not enough yet to woo in the buyers. The other is that you still have safe haven demand. You still have foreign demand coming in, and that's capping the rise. Which one do you see it as?
Well, if you think about where has the majority of the demand come from, right, when we talk about that buyer still supporting the Treasury, I mean, the largest buyer of Treasuries has been the Fed, followed by China, followed by Japan, followed by arguably banks and the Treasuries they hold on their balance sheets. And all of those are moving in the opposite direction. Now, is there still a bid from, sovereign funds and other investors, pension funds in the U.S. even? Sure. But most likely that bid is going to hit the longer end of the curve because that is more related to longer-term liabilities than those pension plans or insurance companies, for example, have.
Well, explain that for a minute, because we do hear about pension plans and insurance companies really needing longer-term securities. But when you say long, is that 30 years exclusively, or does it include 10s as well?
It's generally longer than 10, because if you think about a typical pension plan, right, these are really long-term liabilities, and that is one theory for why perhaps we've seen that long end of the curve sort of pinned down and the curve flattening this year, as opposed to sort of, the front end leading and the back end following.